Hi everyone, this is Josh here with Invest with Meh, and today's video is going to be a copium central video for the gut punch that the market has taken, with specific emphasis on Robinhood. Although we're not alone, this is market wide, thanks to POTUS and rhetoric around some of the decisions that the new administration has decided to take uh, and move forward with as far as tariffs go. We're not going to talk about that. I'm sure everybody is aware of that situation. I think what else has hurt the market is just the general nonchalantness of, you know, not really caring what happens with the market. I think that spooked a lot of people, whether that's a front by POTUS or if it's the truth. I guess we'll find out in a few months, um, when midterms get a little bit closer. We'll see what kind of resolve they have then. If the market is in a full blown bear market, would not bode well for the Senate and House representatives as they head into their congressional races for seat positions. I don't think he wants to lose both the House and Senate. But with that being said, we'll get into a little bit of copium here, and I want to talk about Robinhood in particular because it's taken, with some of the other growth stocks that were very popular this year, the brunt of this hit to date. I saw today where the market shed about almost $2 trillion in market cap across the entire stock market today. I know the Mag 7 was somewhere around 750 million, so almost an entire $1 trillion just wiped out in one day today. So this is definitely not a usual trading day. Uh, these happen, occasionally, throughout the year. Not often do you see a 4%, 5% pullback without some kind of huge catalyst. A lot of what's going on right now is just, it's not any one specific thing. It's mostly just general uncertainty over several things that's setting the market back. We're already in correction territory for the Nasdaq. I know the S&P is where's it at right now? SPY or the ES is at 55.97, so it's in the 550s. It's very close to correction as well, which would be around 10%. At this point, I almost expect that to happen just to say it happened. You've come this far, you might as well go another 2% down just to get it out of the way. But for Robinhood, I have the chart pulled up here. This is just the daily chart. A couple of lines here, just long-term trend lines that I've had for a while. My golden crayon line here was holding for a good while. I was really hoping we'd catch a bounce. Obviously did not. Fell right through and fell right through with volume, which is super scary. But we'll try to alleviate that. We're down further in aftermarket here. It's at 33.60, 33.70. We closed at 35.63, so it's down another $2 after being down 20% on the day, which is insane. You can just see the drawdown here from almost $67 to, it's been cut in half in a month, without any real changes what we know of to the stock. And we'll just go through those things today to try to breathe in the hopium. So let's take a look. First, we'll just go over the chart. You can see it's broken down here below this long-term trend line that was resistance for nearly a year. It turned to support when we broke out after the presidential pump. It retested it a few times, and then it took off. And then we had earnings, and it really took off, where it peaked out. And then ever since then, with the tariff drama, the general market weakness, and the weakness in the crypto market, you can see Bitcoin down here trading at 79,000 or whatever right now. All of those factors have really hurt Robinhood. I mean, after all, they are a brokerage first and foremost, so they make their nut by other people trading, and people don't trade if the market's super spooky. It keeps a lot of retail out, and then the retail that was in is getting washed out right now. So it's really going to hurt their assets under management, theoretically. If those people sell, I mean, it could bounce, not Hood specifically, but the general market, what people are invested in could bounce, and we could be 5% higher a couple of weeks from now than where we are now. And it's like, okay, well, not a big deal. But right now it's super scary because if it does continue like this, even if it doesn't continue down, but if the volumes start to drop off and the market starts to chop sideways just because no one really wants to be in it, um, until there's more clarity around the macro situation, then it's going to really impact Hood. You would think. Now, we don't know this for sure. We get February numbers tomorrow. I expect February to be fine since the majority of the month trading, until the very end of February was pretty typical for what we had seen over the last 6 months to a year. But once we've lost this, we've also lost some of the volume shelves that we had. I mean, we're sitting at $34 almost even right now. So there's not a whole lot stopping this from coming down here to fill this gap at 30.70. And then if things were to get really ugly, which I don't expect them to, but again, I didn't expect us to be here. So if they were, you can fall further and close the election gap, which is down here at $25. And it also happens to coincide with this longer term support line that we really only fell through in that freak episode um, last year for the yen carry trade when the whole market just shat itself and fell through on that, but then it quickly recovered. So I almost don't even count that, but we have several touches here along the way that you can look to say, hey, maybe this would be support if this continues down this way, fills in this volume shelf, and catches down here somewhere. Because if you look here, the where the majority of volume is between $6 and $23. This would be, kind of the target area if you wanted to enter. The point of control over the last 3 years is down here at $10. So people were still way, anyone that bought down here is still way in the money on their purchases, which I think is a good thing, because that means you're less likely to have some of those long-term holders be shaken out by this dip. Obviously, a lot of people are, but there are some people that are still up almost 100%, even with where it's at right now. And it's like, well, I might as well, if you've ridden it this far down, you might as well hold on and see what happens. Aside from that, we'll look at the couple of other things I've got here. Just go through the fundamentals again to try and make ourselves feel better. All right. So you're looking at just the general dashboard. This is visualstocks.com. It's great. I do pay for this. It's kind of nice. You can export data and play with it, which I really like, from their chart engine. So a lot of the stuff I create, actually, I pull data from here. It's not always right. I found a couple instances where it's wrong, and I've had to go to the 10K, and like if I'm using the data, I have to double check it. But for the most part, it's pretty good. Now you have to really, you have to ask yourself. It's taken almost, it's been cut in half price wise. 30 billion in market cap has been wiped out. The only thing that has changed is sentiment and what people think are going to happen. It's not what people know will happen. It's what people think will happen. People think that we will continue on this path where we have a government that has a malaise towards the stock market and what it's doing. We think that tariffs will continue. We think they will get more aggressive. We think that this will cause unemployment, which it certainly will, but to what degree and for how long, we don't know. Um, We don't know how this will impact inflation. This should not be inflationary, but a lot of people are saying it will be inflationary. Even with, true inflation right now is like 1.5%. It's below Fed target. I've been saying for a while, I think they need to cut the Federal Reserve, that is, with the job market weakening, for months now. It's gradually been going down, 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 down. I don't know how longer they're going to wait. Um, and they know there's going to be a lot of federal jobs that are getting pushed into the unemployment, or pushed off, and those people are going to go into the unemployment market potentially if they can't find a new job. So, I mean, you would think 1 and 1 is 2, and that they would start to consider cutting again sooner rather than later. But the rhetoric, which also hasn't helped from Jay Powell, who talked last week, and will have economic cut decision next week again. He's just saying, hey, we're staying the course. We know jobs are weakening. I mean, it's the same thing he's been saying for who God knows how long now. But it doesn't sound like, hey, we're erring towards cut. You have a government that doesn't care. You have a Fed that isn't going to cut, and you have policies on the macro level that are not favorable for equities, to say the least. So Robinhood's kind of been caught in the crossfire here. To the degree I didn't think it would be. I was expecting some pain short term while macro policies played out. I didn't expect them to continue for too long, it's only been like a month and a half since he took office. So it hasn't been that long. So it's too early to really say how those things will affect or how they will play out. But they were obviously having an impact on the market. So it is what it is. But if you're just looking at what we do know about Robinhood, what we know is their revenue growth year over year was 100%, or here it's 111%. Quarter over quarter, even it was like 100% from 200 million or 185 million to 400 million. Let's see, what was the revenue? Yeah, so that's, well, not revenue, but net income. Net income was 916 million, but you have to take out like 400 million. So you say it's $500 million in, because there was a one-time tax credit for 400 million. It's $500 million in net income. The previous quarter, it was 150. So it like 3x net income quarter over quarter. Now, will we see this big leap again? No, probably not. But it doesn't really matter. I mean, if we see 400 million, the next few quarters, the EPS is going to be around, this time it was around 1, which is because of that credit. And I don't have it on this screen, but if you take the credit out, the EPS was still like 0.55. I think this quarter alone, in Q1, I think is going to be 0.4 to 0.5. Just those 2 quarters, that's almost the EPS of 1 for the year, last 12 months. And if the market stabilizes, normalizes, and we don't see the volumes drop off like everyone thinks there will be in trading, volatility only hurts in as much as how painful it is and how long it lasts. Some volatility can be good. I think we are teetering into the area where it's not good. I think up until now, the volatility has not really impacted trading. And we'll see tomorrow with February. I expect the numbers to be a little bit lower. I know they will be for crypto by about 5%. But for options and equities, I have no clue what they'll be. That's what I'm really curious to see. And I'll do another, once I have that, we'll have January and February data. And I'll have my crypto data through the middle of March, and we can do a projection for what Q1 results will be. And it'll be a pretty good idea. Not to toot my own horn, but I was very close last quarter. My net income was basically spot on. I had 5. I didn't know the one-time tax credit was coming, but I had around 500, I think, and 42 million of net income. You can go back and look at my X and see that. And then I had 991 million in revenue. So right at $1 billion, it ended up being what did it end up being? 1.014. So I think it'll be a pretty accurate estimation of what we'll expect for Q1, which should calm a lot of people down. Just as long as the second half of March isn't abysmal, I think it'll be a good quarter. And I think with some of the incentive programs that they've done and will continue to do, like the quiz, like the trivia game, I think that probably we'll hear about how many people that brought onto the platform. Gold member growth, we know it's good. It's not, you know, it's not something to be scared about. AUC is what will be concerning possibly. We'll see the February numbers again. Probably won't be reflected really there. And then when this ARPU, the average revenue per user, that we won't know, but I think that will still be pretty strong. What you really don't want to see is this last for like months and months. I think short term is fine to have a little bit of pain like this. But if this macro environment persists to where it does start to impact trading, and we'll know more when they do report, because I think in March, from where we are now to the second half back into this month, and maybe even the end of February, early March, that's where we would start seeing weakness in their trading volumes and their trading revenues. But I know crypto in itself, I've been doing the crypto volume times price chart for a while. And this is just the coins that are traded on Robinhood. I pull from investing.com their volumes and their prices for each day. And it's just price times volume charted, graphed over time. And this is for, year to date Q1. And you can see January was better than February, right? Okay. But March is right now better than February. So I think we'll continue to see some volatility here, which is expected. These numbers aren't really dropping off significantly. I mean, we'll just have to see what happens here in the back end of March. But so far, it's actually been stronger than February was, and the drama hadn't even started yet until the end of February. And at the end of February, when we started having volatility, that was actually good for what we were seeing for this price to revenue transition. And we know there, it was roughly 20.4 billion, I think is what they gave us for notional volumes in crypto for January. So I think with that estimate, being February, I think calculated at 17.9. And if March can just hold flat from here on out, with what it's averaged to date through 10 days, or when I did this, it was through the end of last week. We'll see, 19.8, almost 20 billion again in notional volume for crypto. So crypto looks fine. Last quarter they had around 70, I think, 70 billion in notional volumes for the entire quarter, 20 roughly. I mean, you're going to have 55 to 60 billion this quarter. Their take rate has gone up from 0.5 last quarter. It's been 0.6 most of this quarter from what I can tell, based on what it's on my app when I look at crypto take rates, and apparently it's different for some folks. But with that increase, it offsets the slightly lower volume. And the revenues that I'm estimating are still around $350 million for crypto. So that hasn't really changed from what we saw last quarter. I mean, that's spot on with what was crypto trading revenue last quarter. Let's see. Revenue by segment. So trading was 612 together, but crypto was 358. So it's almost not any different. And if you go to Robinhood Investor Relations page, and you look at their monthly metrics dashboard from January, you can see that equity notional volumes were not really any different than what we saw in Q4. Same for options contracts. They're actually higher than any time we had seen in Q4 previously. Margin book, everything is higher in January. I don't expect to see some crazy drop off in February. So with what we do know, everything is fine for Robinhood right now. I'm not saying it will stay that way, but up through the middle of March, there's not really been a crazy change here to the underlying story of Robinhood. They had $1 billion in revenue last quarter without the credit. And if we get 350 again for crypto, based on what we see in January so far for options and equity, if we get a similar number for February, it means we'll just need a similar number for March, and trading revenues will be roughly the same what they were in Q4, which was a banger quarter. And if you're going to look back year over year, this is going to be another 100% year over year type quarter. Um, it won't be a 100% quarter over quarter. It'll actually probably drop. I would expect maybe a little bit quarter over quarter. That'll really come down to how much they're making on their interests from the assets that they have under custody. It was at 204 in January. We'll see what it is in February and December and March. Um, but if it continued on the trajectory where they're bringing more assets onto the platform, enough to offset the money that's been lost on platform, maybe there is a chance that their net interest comes in higher so that they can have an even better quarter than last quarter. I don't think it will, but we'll have to see what deposits looks like and what their margin book and um, assets under custody look like when the February numbers come out. That'll at least make us a little more comfortable with Q1. Now, I can't say anything beyond Q1. Does this pain continue through March? Does the macro stay this way? It's hard to say. If the administration backs off at some point, do we get resolution in Ukraine and Russia? Um, there are a lot of events that can happen. Honestly, at this point, like a tweet from Trump, even acknowledging that, hey, we're not going to let the stock market crash, would probably launch us because we're so one sided right now um, with where things are. Some other things that I've been looking at, like this VIX to VIX 3 month ratio. Anytime this, which is the red dots, is above one, usually the market it will draw down in those periods, and you've seen that consistently over time. But once this rolls over and short-term VIX, flips back the long-term VIX, which it's inverted right now, the market usually goes through recovery phases. And right now, it's kind of in that area where it's above one, but maybe it'll roll over soon. But short-term VIX is very high right now. So this is actually probably gone up since I made this chart. So as long as that is happening, expect more pain in the market. This is just looking at the Fed. Like I said earlier, I think they need to be cutting. We're just not seeing, inflation's down. I mean, PCE, even their favorite metric, isn't really, it's not moving. It's the same spot it was a year ago. Spending's up. I think that's just a factor, an effect of tariffs. People were pulling their spending forward because they think that they're going to have to spend more later once tariffs hit. And the fact that that hasn't really driven up inflation or PCE tells you there really is no inflation issue. Like this spending is not affecting inflation at all. Like people spending, like it's just not there. Inflation doesn't exist. We're fighting a battle that doesn't exist. Meanwhile, jobs are steadily trending down. And we'll get JOLTS data again tomorrow, I think at 10 a.m. Eastern time. So we can see what that is. But I expect it'll probably be another lower number. Some other tables that I put together recently that involve Hood. This one's pretty interesting. When I was looking at hoping that they would get into the S&P 500, which they didn't, I was just kind of looking at their forward PE ratio and the 3-year compounded annual growth rate. Looking forward for Robinhood, they have an outstanding growth rate right now, and they're projected to continue to have an outstanding growth rate as they pick up market share from legacy brokers. And there's a lot of things that they're rolling out that haven't even happened yet, like their AI agents, tokenization of blockchain, which, not blockchain, but of equities, which would significantly impact their margins on equity trading and options trading. They have the gold event coming up this month, which is pretty big. Expansion to Singapore. They continue to expand in Europe. They continue to add things to the platform. They're doing all these special things like the trivia event to bring people on as gold members. which is a big key for them to have, just consistent revenue with the gold memberships that they can rely on. When we have times of volatility like we do right now, the trade PMR deal is closing or has closed. So there's that. Their RIA space offerings will probably start to kick in, wealth management, which hasn't really been a thing for them until recently. Uh, oh, yeah, I won the trivia. Woo. But yeah, I mean, their rule of 40, they're beating rule of 40 on like all of their revenue streams that they have for trading. But combined, they are definitely revenue growth over 100%. Um, EBIT margin percentage wise over, it's 50%. There's just so many good things about Robinhood. Um, comparing them to the Mag 7, like they're they're basically undervalued. I mean, their PE right now is at 30 and they have a 19% forward compounded growth rate. That's more than Nvidia. So I don't understand. Like, you know, that's what we know. Unless the market completely falls apart, I just don't see that it can stay down here for that long. And going back to the market, um, let's just look at SPY. God, my camera sucks. It's like a potato. All right. So let's go back to here. Look at this drawdown. Do you think we're closer to a bottom or continued pain? Like, how far do you think this is going to go? I mean, we're already almost down 10%. Do we go down another 10%? All the way back to 500? Do we go back and retest this really long-term trend line that goes back to, I don't even know, God knows how far, down here at 500? And close in this, into this segment of the volume profile? Or fall back into this box where the point of control was, in this value zone? I don't know. I mean, that would have to be a pretty major crash. I just don't see, this is a significant drawdown. I think these are the times where you have to suck it up and buy some or just hang tight and see what happens. I mean, you've already let it fall, this far. I don't have the moving averages up, but we've already lost the 200. I think the NASDAQ bounced off the 300-day moving average today. So everything is below moving averages now. It's just kind of a no man's land. I mean, I think the smart thing to do is probably just to sit tight if you're already in positions, as long as they're not, short dated. I rolled all my stuff out into January 2027 because I was already getting my ass kicked on shorter dated stuff earlier in the week and end of last week. Unfortunately, I had cover calls against pretty much my entire position, so I was able to close those out and mitigate some of the losses that I had. But it was still pretty bad. It was a gut check. Let's see. But yeah, if you go to the 4 hour, this is 4 hours over the last 180 days. So for the last half a year, we're at the bottom of this box. And this is for the last half year. I don't know how much worse it gets from here. But I have to think that we're closer to the end than we are to the start of a drawdown. So we'll see. Yeah, if you look at the last year, we're kind of firmly in the middle here. Point of control is way down here over the last year on the daily at 516. I mean, that's back into the August drawdown last year. And I can't speak for every stock, but I know Robinhood is a hell of a lot better off than they were this time a year ago. They're a better company. They're better positioned. They have way more users. They have a better product. They have better fundamentals. So it doesn't make a whole lot of sense to me that it would be trading where it was a year ago because it's not the company it was a year ago. And I don't think they're with the new administration and the new SEC and the hurdles that they were going to have to go through under previous administrations, it's going to be easier the next 4 years for them to do things. They will get into sports betting contracts. They will continue to do these things like the trivia, whatever else they have in store for us. They have the gold bar thing going on right now. Next week, they'll have another thing for the gold events for this year. I think they'll continue rolling out things throughout the year that bring people onto their platforms. I don't, you know, I don't think crypto is just gonna go away. Um, let's look at BTC. You think people are just suddenly gonna stop trading crypto because of a bad month? Yeah, sell the news. The government is involved now, but people are still going to trade it because there's still money to be made, because there's still buyers, there's still sellers, there's still liquidity in that market. It's still $1 trillion. That's not going to just disappear overnight. Um, and you ask yourself the same thing here. Like, we've closed this gap from the election. We're firmly kind of in this valley for where the volume profiles are over the past year. How much further is it really going to fall from here? Maybe back down here to the 60s, the high 60s. Yeah, sure. But you've already pulled back over half of that distance. Like, why are you either wait to see it bounce? If it bounces, if it not, it's probably going to catch down here on this previous resistance and turn it into support. Just wait and see what happens. I don't think crypto is in a worse position than it was a year ago. I think it should be easier and less regulated to do things, in this area than there was previously. So it'll be interesting to see what happens over the next year, um, regardless of what the White House does. I still think it's a market that people will play in and trade. That's exciting, and I think with volatility, it'll continue to be exciting. People were playing these big 10% swings intraday. There's people making money on this now. Whether they're doing it on Robinhood's platform, I don't know, but they have futures now. And I know I have opened short BTC futures contracts against my hood position as a hedge. And I've made money on it a few times. So other people probably are too. And I'm no like futures trading expert, but that's just one of the new products that they have that people will use. And there's a good take rate on that. So that's just another revenue stream. And then Vlad talked about it a couple of weeks ago, when during an interview at the JMP conference, said they're already seeing the kind of growth that they want to see in that market, that it might also one day be a 9-figure uh, area like crypto and options and equities are. So there's revenue streams for Robinhood. Their fundamentals are good right now. They're great. And that's without any of the extra stuff that's coming. That's without wealth management. That's without AI agents. That's without the $40 billion that they're bringing in from Trade PMR that will be assets under management that they can get interest off of. That's without futures trading being fully rolled out until like this past month to everyone. That's with only 10% of the gold card members actually having their card out of the 2.6 million people that have it. If they can manage to roll that out properly, and they have given me no reason to say that they won't, based off of the things that they have done to this point, then I have to expect that they will do it right. And it will be a good product like everything else that they have done so far, in recent history. Now, you can squabble about, what the platform was 4 years ago, but it isn't the platform it was 4 years ago. And it's not going to be the platform 4 years from now that it is today. People always say about AI, was the worst version that you'll ever see. This is probably the worst version of Robinhood that you'll ever see going forward. And the worst version of Robinhood that you'll see going forward just made $1 billion last quarter. So keep that in mind. And it's just took a 50% haircut for no fundamental reason for the stock. It's all sentiment. It's all worries over what will happen on a macro level that may not even happen. Now, some of those things are happening now, but we don't know what the effects of them will be. We can speculate about what the effects will be, but we don't know. What I do know is their numbers. And if their numbers keep looking good, I'm going to keep buying and holding the stock. If they keep rolling out quality products that bring people on platform that I think I like, that I think other people will like, that I know my friends use, I will keep holding the stock and adding to my position. I mean, it's just stupid to have a 50% haircut over what may or may not come to pass. And that's just where we are, and that's the market for you. Welcome to the stock market. So that's my rant, and that's my copium. Yeah, I look at this chart and I say, well, I think we're probably closer to the end of this than we are at the beginning. Could we go down and fill these gaps from right around the election, right after the election? Sure. Why not? Do I think this would be the most insanely undervalued stock at 25 bucks in the entire stock market? Yeah. Because I think there's still a chance this year that their EPS for the year is like 1.7 to 2. And if it's anywhere near 2 at $25, the PE would be like 12. I think the actual current last 12-month PE would be like 12. And even if it's 1.7, which I think is very doable because it was 1.5 last year, it's still under 20. It would still be under 20. If it goes down here to 30, it would be under 20. And it's growing, Ford Kager is 19%. Like, that makes no sense. Like, I don't know who's selling this right now. If it's just retail who got in and they're just panic selling, and maybe it's institutions taking profits just to hedge. But if we're in a scenario where this really breaks down and the market keeps breaking down, it's not going to be because of anything Robinhood has done. It's just going to be because the entire market is falling apart. And if we're at that point, why does it even fucking matter? Because I'm outside of some staples and maybe gold, everything will be in the shitter. Your SPY will be in the shitter. Your QQQ will be in the shitter. So it doesn't even matter at that point. You're just going to have to hold for a decade and see, hope for the best. And do you really think that tariffs is a reason for that to happen? Like, if we don't end up having inflation, if we don't end up losing an overwhelming amount of jobs, if we end up just cutting slowly, is that enough reason to send the stock market into just this death spiral? Assuming no additional world conflicts like China invading Taiwan happen. I don't know. I don't think that's a good enough reason, in my opinion, for the stock market to crash. And if it does, I think it would be like this crazy phenomena on the VIX that would have some weirdness would have to happen, like the yen carry trade, for that to be the reason. Like, something else would have to break to cause that. So we'll see, where we are in 3 months. I think we'll be fine. I think end of this year, start of next year, if we're still in a weak market, I think Trump will turn back into Donald Pump instead of Donald Dump, because if you're in the midst of a 20%, 30% drawdown and in a bear market heading into midterms, it's not going to end well for you. You're not going to win. Republicans don't like being poor just as much as Democrats don't like being poor. So if you're killing their property value, if you're killing their 401ks and their retirement, which most people have these days, even people in lower incomes have retirement savings, and if they see 33% of it get wiped out, they're not voting for you. So something to consider. And it may come to pass that all the decisions he's making right now will cause this great rebound in the market in 6 months. And that would be cool too. Totally fine with that. But I think if it doesn't, then I think he'll start to change in his execution to try and get a turnaround started. So I think regardless, either his policies work and the market recovers on its own, or they don't, and he changes things to try and make it recover before midterms. Either way, they're going to have this right before midterms next year. That's just my opinion. I mean, politicians going to politic, and people's pocketbooks is just not something you fuck with on any level. So we'll see. All right. Well, that's my spiel. That's my copium for Robinhood. We'll see where it goes in the next couple weeks. I don't know. My options are in 2027. I have puts against them for 2027. Um, and I'm just going to keep selling covered calls on those zebras that I have open weekly, out of the money, 10% or so, and just rinse and repeat until we get out of this. And if it looks like we're going to break back out, I'll probably just take them off and see where it goes. All right. Thanks, everybody. Happy trading. Talk to you later. Bye.